Welcome, guys. Welcome back to another weekly webinar. And so thank you so much to all of you guys who have come out thus far. I really appreciate it. And thank you so much to all the people that are watching this later on tonight on YouTube. Thank you so much. And so this week, guys, a lot of exciting stuff to cover and go over. As I was stating before, I popped on the recording that a lot of our ideas and theses are coming to fruition, which is quite good to see because now it allows us to formulate, more decisive conclusions on which way structure should move. And so we're in a very critical area right now because looking at all dollar pairs across the board, we're expecting a huge type of consolidated range to occur for quite some time now, unless we can see definitive cracks of the lows or highs. And so very, very critical, but at the same point, interesting to look at from a market structure perspective. And so if you guys don't know how these webinars work out, ideally what I do, guys, is I go through these $6 pairs, including the dollar index, making it the 7th pair, from a monthly all the way down to a smaller time frame perspective, in which we can look at how structure is behaving and acting from a longer time frame, as well as how we could potentially secure entries and exits from a smaller time frame perspective. Now, please factor in that anything that I state on the webinar market structure could completely change by the time this webinar is released, and so therefore ideas can change. But looking at it as of right now, guys, if you guys have any questions pertaining to what I'm reviewing or going over, or any questions that you guys want to ask me, please either write them down in the chat room or hold them to the end, and I promise I will get to each and every one. And so with that, guys, let's get right into it. Thank you so much again for all coming out. And so we'll start off on the monthly time frame on the dollar index to get started. And so let's get right into it. Taking a look at where we are within dollar and just looking at its nature all the way back from 1986 until now, dollar is still treated as a depreciating asset. As of right now, we can state that this is definitely the main driver in power, right? Regardless of what's currently happening within this bullish momentum, okay? And so looking at it though, in the smaller time frame perspective, what is going on as of right now? Well, after we saw the deceleration and push off of this ascending trend, we did start to see some type of relief and profit taking occur after that initial impulse was made at the start of 2017. And so looking as of right now, are we in a bullish run on the dollar? And the answer is no as of right now for a couple of reasons. One, we are at a very critical area when it does come to pending orders from the buyers and the sellers. As once before, this was a buying territory, which now turns into a selling territory or basic support and resistance, right? And so this should give you guys indications of where the potential bigger money is going to start placing their orders when it comes to looking for a longer term play. And so looking at as of right now on dollar, we can see deceleration occur around that 94.15 handle. And so the question does come about, are we going to break out or are we going to start seeing continuations back to the downside? And so looking at it from a smaller time frame perspective into the weekly, can see that we had this initial drop, then a state of liquidation or relief, and then we saw continuation to the downside. But now looking at it, the nature in its entirety, we're still going to state that this is the range that we're trading in. Now, one thing that you can factor in is, yes, there are bullish formations to come about with the potential head and shoulders if this does pull back to create liquidation, creating that right shoulder, potential bull flag and things of that nature to rally back up, and being that 94.15, that 95 handle being your neckline. That's plausible. That's possible to come about. But as of right now, we still have to state that, you know what, there's no clear direction on either side. Because unless we break these lows or break these highs, we're simply going to state structure is going to be range bound for the time being. Now, at the same time, that's not to state that we can't expect a deeper pullback all the way back down to 90, and then from there expect a big rally back to the upside. That's definitely possible as well. But looking at dollar as of right now, we're just going to state we're range bound from 93 to 94, 95, right? There's nothing more that you guys really want to go about it. You know, trying to come up with theories on how structure could come about for months on end and really focusing on them could cause you to skew your view. I only do it, guys, just to give you guys interpretations of what potentially could come about. But regardless, you just want to make structure very clear and crystal and just be like, you know what, those are my parameters that I'm trading within, and that's all I really care about. And so looking at dollar from the daily time frame as of right now, we do see a large rally. Then from there, we see a short continuation pattern, another huge impulse, one more continuation and a rally. But if you guys are part of my course and you guys know behavioral analysis, you guys would know a couple of things. These impulses became shorter. On top of that, after we impulse, this is due for reversal, not for continuation. You guys know the difference between a continuation and a reversal pattern. You guys would know that structure is not showing for continuation, but rather reversal. Now, regardless if it's telling us and indicating to us, listen, we might expect a deeper pullback down, until we break these lows, you're never going to get that relief, right? And, buyers are still in power. And even when the sell comes about, doesn't mean that the sellers are going to completely take over, because you have this 90-91 area that is really the basis of where this entire bull run came about. And so, like I was saying, this could just rally to here and then start a huge rally back to the 94.15, 95 handle, making all of this relief and things of that nature. But making it very basic and simple, we're stating between the 93 and 95 handle. So looking at it from a 4-hour time frame and how we could approach potential entry and exit perspective, let's talk about a couple of things. To start off, we are, in fact, range bound. And so let's identify the range just to make it nice and clear for us. And let's state that is our range that we are trading within. Now, looking at it, we can see that we have a sharp push to the upside, reversal pattern that now turned into continuation. Now, some would say, well, that doesn't make sense because we broke the lows. How are we turning into continuation? Now, it's not to state that the buyers are definitely in power. This is going to be a choppy area regardless, because you're sitting above monthly resistance. Hence, there will be a tremendous amount of pending orders from the bears, right? You know that there are a lot of orders sitting from an algorithmic perspective sitting here. And so really any buys should be taking above there, right? You don't want to deal with all that choppiness. But looking at it from a smaller time frame perspective and how you could potentially solidify an entry, once that cracks, then you could expect a rally back to the tops. And that would tell you that you should see continuation of that initial momentum, stating that this is a structural retest of the once previous resistance, newfound support sitting there, and things of that nature. Now, that is viable. But at the same time, looking at it, we have not created higher highs yet. This could be treated for relief after that impulse for continuations down to here, potentially even lower to the weekly support. Once again, guys, this is quite impulsive. We would not be surprised if this just legs down all the way to here. And like we were stating on the daily, starts to rally back to the upside. That's very possible. In the end of the day, you're just trading the ranges from the tops to the bottoms, right? And that's all you really care about. Now, if you're the type of trader that cares more about their risk, every trader cares about their risk, but really wants those conservative trades and those, less risk exposed environment trades, taking them above here or below here. Don't get me wrong. Once you see sells below there, you do have a good shot to go again. But like I said, this is all choppy. And it's choppy for numerous reasons. You can see here that we had previous weekly resistance, which is newfound support once we broke above. On top of that, we do have monthly resistance sitting here. So you know for a fact that the bears are now going to be tossing boats, right, that are sitting with tremendous amounts of cash. The way I look at it is like a battlefield, right? And once you start coming into these critical areas, monthly resistance, or weekly support, whatever those key levels, it's like you have 30 different armies shooting at you at once, right? And it's up to you to dodge those bullets. And you might get the run, or you might just get those false breaks. And so that's potentially what could be happening. Be wary of these tops. See what occurs near here. We're either going to continue down, or we're going to make a really strong rally back to the upside. But just taking into consideration, you are range bound. So bringing that to Euro US dollar, direct inverse of the pair, seeing deceleration and exhaustion occur near that 115 handle, which is where we broke the 3-year previous resistance, which is now newfound support. So there's two plausible ways that this could come about. Once again, either A, this is a structural retest, this is all relief, and we are going to rally back up, at least to here. It's possible. Or B, this is just going to relief back on the weekly, and then from there start dropping once more, completing that head and shoulders pattern. It's too tough to say. Just like we're stating on dollar index, you're assessing all trades right now are range bound or are warranted as short term. And so you're really just trading between that 125, 126 area to the 115, 116 handle. So bringing it to the weekly time frame as of right now, yes, a lot of deceleration and exhaustion is occurring. Confused? Take a look at this real quick. You can see here in the past that we did have a lot of pending orders from the bears. Break above, right, basic support and resistance. This does become a buying territory. Short term for now, only because we invalidated that initial breakout, stating that, you know what, that break was now false. Hence, the momentum that's in power right now does become that initial impulse that was made. So looking at it, though, you guys are going to state now, well, where should we move to? Two potential areas. Either A, we're going to move back to this previous region where that left shoulder was created with the head, the left, and potential right. And so we're going to see a relief, which would make sense because of that initial drop. This would be treated as profit-taking liquidation, and then we would see continuations back down to the neckline of it, and potentially crack all the way back down. Who knows, to potentially fill that gap of the French presidential election, right? Now, if we don't relief back or we don't liquidate back to there, we could actually liquidate all the way back to the descending trend, and that would create a structural retest on the low that was holding for numerous weeks, about 2-3 months. And then from there, we could see the drop back down. The only way it becomes a buy is if we see a strong crack above this entire region. And I'm stating a buy for 400, 500, 600 pips. Now, this could equate to 400, 500, 600 pips, or maybe 300, 400, but we're talking about that clear, definitive buy where you're going to go. And so looking at it from a weekly time frame perspective, too many potential ways that we can move about. So we're going to make it very clear and very simple. You got the tops and you got the bottoms. That's what you're trading within right now, unless you see breaks above or you see breaks below. Failure to do either is just going to warrant consolidation, and that should not be something that you are interested in. Now, looking at it from the daily time frame, this should give you more clear perspective on why price pulled off. You can see here in the past behavioral analysis again, right? False break, we pull back. Don't be surprised why movements occur. Everything happens for a reason in this game. And so you can see here in the past that we falsely broke. Art of Technical Analysis states we're using past historical data to predict future potential movements. We do incur the same thing. It's not, it's not something that we should be weary of. But looking at it and why we were stating this is so important for last week. Well, if you guys were aware of what was going on last week, there was a tremendous amount of pending data that was coming out. And so if that was the case, right, before that week prior, we had FOMC and Draghi speaking. And so we were stating if this low doesn't get broken, then next week's going to be the week to do it. And if that week doesn't do it, which was last week, then you know what? We are going to pull back. Why am I stating that? Think about it for a second. Those are some serious catalysts when it comes to economic decisions. Tremendous amounts of money are going to be poured into the markets at that current moment. So if we can't break certain key areas, it just tells you that a certain side, buyers or sellers, are holding too tough. And so therefore, you should pull back at some point, right? It's just basic psychology at that point. People are going to get feared out and start pulling off. And so looking at it from a smaller time frame perspective, and we're going to get there in a second, we believe right now that, you know what, this should potentially rally and make a big state of liquidation or relief. And then from there, we will drop once more. And the question is, do we stop at this key point sitting here, or are we going to pull back all the way to here and then drop? So that's really what we're gauging right now. Still sell bias, which means all bullish trades to the upside are treated as short-term and higher risk. Any bearish trades are treated as longer-term and lower to moderate risk. Looking at it from a smaller time frame, let's see what happened. We see a huge impulse, a state of liquidation, and another impulse. Now we see a bigger state of relief. One more drop from Draghi. We're still not breaking those lows. Okay. Now looking at it from where we potentially are sitting, we're kind of in this state of relief. Within the state of relief, we did just break the previous high, stating that this is the impulse. This is treated as liquidation or relief, potential flag. And so if we do break out, potentially retest, you could expect a rally back to the weekly resistance short term right now, because that could create a structural retest to the left and then potentially drop all the way back down. That is possible, and this just simply would be your ascending trend then at that point, right? Now, if that doesn't happen and we're still rallying from here, you're going to want to see a bigger break above to state that, you know what, this is now invalid. And then from there, you're going to look for some type of continuation, and then you could take it back to the weekly resistance and potentially even higher if you get the momentum. One thing to factor in again, guys, though, is that you are range bound in the end of the day. So any trades are going to be treated as short term, regardless of the direction that you go. Safest areas that you're looking to take trades are above or below, right? And so looking at it from the sell bias on this, the only way that this becomes a sell is if and only if we break back below, stating that this breakout was invalid. And then from there, you're going to look for a continuation pattern, and then you can run it back to that ascending trend found on the daily and the previous areas where you saw all these rejections occur from the bullish side. And so looking at it as of right now, there's two possible ways. You're either going to break above or you're going to break below. Failure to do either will warrant consolidation, and that should not be something that you guys are interested in. USD CAD, starting off on the monthly time frame, a very wild pair that a lot of people have been interested in and are curious on why CAD is not, it is not acting in its historical manner. And so if you guys are not aware of how CAD economics play out, They start off with a sharp impulse followed by a long state of liquidation, and then from there, continuation of that impulse, and then another state of liquidation or relief. And so when we were in this area rejecting here, creating a structural retest of the previous support, right, we're expecting that big drop. Now, even though we are expecting, we trade what we see, not we think, right? And so looking at it, now we're breaking. But is the breakout still true? And why are we rejecting? Well, let's understand why is this rejecting near here. And we can see why now. Past, we had some orders sitting here. We had some orders sitting here, some orders sitting here, some there, and now some there. Okay. Is it to state that the bearish momentum has now over? Not yet, because you want to look at what really created all of this bearish play. And it was the rally of this initial impulse. And then from there, we do see another state of relief, and then from there, another drop. This is the key area that's going to dictate whether CAD takes off and skyrockets or not. Looking at it, though, what caused this rally? Well, wasn't it the break of this low that created a lower low? So if we fail to break that, this could just be a structural retest, and we could simply start cracking down, get to that trend, either decelerate, or we're just going to crack again and make that big, gigantic impulse that we saw. The only way on the weekly time frame that doesn't come about is if and only if you saw some type of pullback, creates a continuation, and then from there you could expect a rally back above and potentially even higher. I would need to see a formation like this occur for me to state we should start looking for buys on CAD. If not, I'm going to expect sharp movements down to state that this is a false break. But right now it's too tough to say, because you got a lot of bearish pending orders. One's bullish, now bearish, right? Sellers own this. But at the same time, market momentum is ascending, becomes too critical, too high risk of an exposed environment for us to trade within. Looking at it from a daily, yes, we did break out of that weekly descending trend line. We do see a sharp impulse to the upside. Within that impulse, we are seeing a state of deceleration or exhaustion occur, which makes sense. If you look to the right, we do see weekly support sitting there. We do know that there are going to be a lot of bearish pending orders sitting there. As we can see in the past, we did see a lot of bearish rejections there as well. So it makes sense, not there, sorry guys, here. So it makes sense why we should see rejections at the 133.46 handle. Now, looking at it though, and like I said, guys, there's two possible ways before we even move into the smaller time frame. Let's pull it to there. If this breaks out, which I expect it to, it's going to rally to here. And all that momentum is treated as short term. It's going to be a nice sell setup for two reasons. Either A, you're going to be the person that catches the momentum that drops all the way to there and you just got that sick entry. Or B, it's going to be short term because this is going to be treated as relief for upside, creating a higher low on the trend, structural retest of the previous high, broken, things of that nature. And so it's just going to be tend to how this form it out. But like I said, any bearish or bullish trades are treated as short term unless you see clear, definitive cracks in one direction above or below, and not even there. You want to crack back below the monthly resistance to state that this breakout was invalid. So looking at it from a smaller time frame perspective and see how we could approach the entries and exits, here we are. Even though we have this daily ascending trend, we do see a massive break above that descending trend on the weekly. Now, with every impulse, right, does come pullbacks or relief. In this instance here, we have never received a pullback or relief just yet. And so with that being the case, right, what we're going to be looking for is at some point some state of liquidation. Why? Because this cannot move in one movement. It's not healthy for the economies to do that. No, there would be no fluctuation to occur. There would be no trade being going on. No people would be traveling and stuff like that. So this is reversal, but doesn't mean that momentum is going to start dropping, because this could still continue to go up. Why? Momentum's up, so it should go up. But if it does start to break the lows and start creating lower lows and start telling us that momentum's going to shift to the downside, then we could expect a short-term sell and start running that all the way back down to the daily ascending trend. But once again, even if we get there, this is still treated as relief or a state of liquidation because of that initial bullish rally to the upside. And then you're going to either expect structure to break out, continue up, stating that's continuation of that momentum, or you're going to expect a hard crack back below the monthly resistance to state that this rally was now invalid. This will be critical, and right now we are critical. Don't be that trader that tries to figure out which way we're going to move. Just wait for the tops or the bottoms to break. I love when you see on social media and all that stuff, you see these traders, they're like, I got a trade in UCAT. I'm like, where are you taking a trade? Where are you going? right? It's like there's just no validations for it, right? Don't try to guess it. Let it prove to you that it's going to move in the direction that you want. That's the approach that you always want to have. If you start looking and start trying to hunt for trades, you will be hunted at some point. That's the way that I look at it. Let's start with UJ on the monthly. Tough pair that a lot of people want me to review. Looking at monthly as of right now, I'm going to go over just the basis of the impulses on there. On UJ, there's an impulse, then an impulse. You do see this massive rally to the upside. It does create this strong base at the 100 handle, treating all of this as liquidation or relief, right, for potential continuations back up. But until we go in there, let's take a look. We do see a strong impulse, a base, treat it as liquidation. We could potentially rally, but we didn't. Why? Broke the lows right here, stating this impulse potentially is invalid. Want to keep in mind where that impulse started. Telling us that we're still treating all the bullish momentum to the upside as short-term or higher risk exposed unless we break out. But why are we stating that this impulse may be invalid, but may not be? Is because where did it start? On the break of this previous resistance, creating newfound support, etc. So that's why we're stating it could have simply just tagged, create a structural retest, and start rallying back up. That's very possible. At some point, we're expecting this to kick in, but we don't know if that's going to be before we tag the 100 handle and then rally, or are we going to start kicking in now? And so that's going to be dependent on what pairs do across the board. But looking at it from a daily perspective, as of right now, we can see here that there is a lot of rejection occurring at that 111, 111.50. And in addition, we do see a sharp movement to the downside, which is why we were stating all of this is treated as liquidation or relief. But now a lot of people might state, well, we broke out of the ascending trend. So why didn't we pull back? I mean, why didn't we drop? And if you guys know my notion about trends, a trend is not a straight line shot, but a dictation of highs and lows. And so if that's the case, we never broke the last higher low of the ascending trend. And so therefore, market momentum should simply just continue to move up because momentum is ascending. Now, if we broke the trend creating lower lows, then yes, you could have expected a drop down. But that never occurred. Hence, this doesn't indicate or confirm to us that we should be looking for sells. At the same time, you do want to factor in what you're dealing with, which is weekly support. And so if you try taking a sells within that, everyone knows my rule, right? For a daily, it's 4 hour. For weekly, you want to look for a daily break and retest, and then monthly, it comes down to weekly, right? Those are the golden rules when it comes down to approaching levels. But looking at it from a daily perspective as of right now, sharp movement, treated as relief or liquidation, failed to break the low. So let's take a look. We do see a sharp movement up. Okay. State of consolidation. I'm not going to even try to state that this is the relief, this is liquidation, we could expect short-term continuation. Yeah, that's possible. But looking at it from a very clear point, it's above or below. Yes, you get a short-term sell in here. Fine. I would even probably signal that. But the real trades are below or above. And so looking at it from a 4 hour perspective, what do we see? Well, we see a lot of stop hunts, which I can expect. Probably a lot of people got stop hunted here when we broke these lows. And looking at it for a false break of there, this was the descending channel that we're in. Now let's take a look at this descending channel for a second. It's very slow and it's very decelerated after that impulse. So it doesn't tell me right away that the bears are in power. And looking at it, there's just really two possible ways that we go about it. We crack that low. And then from there, you're looking for continuation and you could start to run that down. Treat it as short term still, because remember what you're dealing with. That impulse, hence, that is all your really, your base, your higher low that has to crack. Because if this occurs, could decelerate and then start to rally all the way back above. The only way that this becomes a definitive sell is if you see a crack back below stating that this is no more. It's invalid. And then from there, you look for continuations and then start running it all the way back down to the daily support at 106. Now, if that doesn't happen, where does the buy occur? That. Don't try to fight in this. This is just asking for trouble. There's just so much, choppiness that occurs. It's not necessary. And so looking at it, you know, people would say, well, why can't I take this? Yeah, you can take that. I'm not saying it's incorrect. If you break out of that, sure, go ahead. But what I'm stating in the end of the day is that it's short term. If your entry's here, the last low is here, the R&R is not going to be a one-to-one, right? And it's not something that you should be interested in. So that's why I'm stating wait for the tops to break, wait for the bottoms to break on something like US dollar, Japanese yen. Pound dollar, finally pulling off, finally decelerating, which is expected. Look at pound's economics real quick. We start with a sharp impulse, then we see a relief, and then we see another continuation of that impulse. And within that impulse, we saw smaller term states of liquidation. Now we were in a long-term state of liquidation. We broke out again. But I'm going to show you on the weekly time frame, we never broke out of the last higher low of the ascending trend. Hence, structure shouldn't necessarily just completely drop just yet. It gives us indications of where we could expect pullbacks to. Now, looking at pound dollar, you can see here that we created a beautiful, beautiful structural retest of the lows that were broken. And so this is just expecting continuation. We're expecting drops. That's for sure. Weekly time frame to start. This is what I was going off of. Notice this. We broke out of the ascending trend. The trend is not a straight line shot, but it consists of highs and lows. And so because of that, we didn't break the last higher low of the ascending trend that can be found near that 131, 130 handle. For us to say that we were going to see continuations of that bearish momentum, we would have had to broke and go. Now, it's cool, though, because you know why? It gives us indications of where we could expect the pullbacks. Why? Where did we broke out that caused that bearish momentum here? Okay, beautiful. No problem. This is reversal. We know that. We know that there's going to be pending orders sitting there from the bullish side because you know what? Buyers on that territory in the past because they broke that previous resistance, newfound support, etc. So you know what? We know this is going to pull back. And we could expect it to pull back to that 137, 138 handle, create a structural retest. That would be your state of liquidation. Creation of the head and shoulders pattern. That becomes your neckline. And then you could expect one more rally back down, right? So that's the beautiful thing about even if it doesn't play out, you know, exactly how we wanted it, it gives us indications, clues of where we could expect structure to move to. Now, looking at it from a daily time frame perspective, you do receive a sharp impulse to start. And then from there, you do see a nice state of liquidation or reversal. Now, it's not necessarily liquidation, apologies. We're more of in a reversal pattern. And so as long as we're not indefinitely breaking these lows, then you know what, at some point you're going to expect this to pull back, and that's expected. And then you're still treating all of that as relief or liquidation for another continuation back down to those lows. Why? This is what you're dealing with, the bearish momentum. Don't try to counter trend trade, long-term speaking. You can take short-term buys to the upside. Just keep in mind higher risk, right, and short-term. Looking at it from a 4-hour perspective on pound dollar as of right now, we can see here that structure did in fact break out of the reversal pattern that we had anticipated that it was going to. And how did we know that? Notice what happens here. So after we saw this huge drop, not continuation but reversal, fair, we break out, boom. But then instead of creating continuation, we actually went back to a reversal pattern, which now potentially could churn into continuation for one more rally up. That's possible. The only way that we can say this becomes invalid is if we falsely break back below that. Then you look for some pullback and then start running it back down. Now you would be like, well, you got the weekly support there. True. Can you take something like this? You can, but you don't want to deal with this. That's the only thing that I'm going to argue. So you know what? Maybe pound is not a trade for you because we already falsely broke the weekly support. It could come down, create a double bottom, and then rally back up. That's very possible as well. And that would just be a big state of liquidation or relief. And so the way I look at it, and we're going to go into this once we go over the last two pairs in AUD and NZD, you're probably going to have to execute this on a 1-hour time frame, most likely. And we're going to go over this when we go over the quick version, the quick breakdown. You're going to probably expect to pull back to here, create a structural retest of that low, and then start dropping if it's going to occur, or it's going to flag out, and start going. And so we'll go more into detail on the entries and exits perspective of that towards the end. AUD USD on the monthly time frame, not the 2-month, but the 1 month. I know have to renew my subscription. And so looking at it, we are bearish stance as of right now. You can see that initial drop that was made, hence this is all treated as liquidation or relief. At the same time, though, just like pound dollar, trend is not a straight line shot, but a consistence of highs and lows. And so even though we broke out of the ascending trend, we never broke out of the last higher low of that ascending trend. We are now, but past month we didn't. And so with that, we were expecting structure to pull back. Now structure is showing opposite signs on that end and is deciding that we do want to see further pushes to the downside. And so if that's the case, and we're going to change these fibs here since we are retracing now. If that's the case, we're going to want to see this whole weekly candle start closing below this region. That's going to be very important for us. Why are we stating that? Let's take a look at what type of orders were established or created back in the day once this flow in fact broke. If you guys take a look here, this is the low that created, in a sense, all the pending orders that we have been seeing. You can see here in the past that this was resistance, support, support, etc. We want to see this broken. It becomes tough on something like this because you have so many critical areas. But there are still potential trade setups to go about. And so, yes, this is showing for potential downside, but be careful. Looking at it from a daily perspective, let's take a look. So what do we see? We did see this massive rally. Then we saw a false break of it. Invalidation of it once we broke those lows. See this impulse that turns into this long state of what we thought was reversal, but then started to continue. Then eventually did what we expected and came back to create continuation, which was expected. You need that. This is a sharp drop. That has to happen. After that occurred, we did see another continuation of it. Now we've understand the behavior. When the bears come in, very strong, right? Very strong. And so looking at it, we're going to expect some type of pullback before any continuation is going to be taken. Someone just mentioned, guys, on the chat room that they can't hear. Can you guys hear me? Okay, so looking at it, sorry guys, from the 4-hour time frame perspective, range bound right now. Why am I saying that? We have established a high and a low. And so if you didn't catch the entry within here and put your stops there, you've already missed the trade. Why am I stating that? Notice what happened here to catch that entry. We did see a sharp movement to the downside, then a nice state of liquidation or relief. We broke that low, creating short-term lower lows and below the weekly support. Hence, your entry would be here. Stops would be above here, the last high, right? Then from there, it would be a basic 1, 2, 3 pattern. 1 being your impulse, 2 being your relief, 3 being your continuation, back to your 1 and potentially breaking lower. So if you missed that entry, you missed it. I missed it. All good, right? But at the same time, I don't like how structure's formulating out because if you look at it, this is the trend now that we're kind of going into. And so looking at it, I personally believe that this is going to create and break out. This is the impulse. This will be a rally that we should see. And I believe that's what we're going to be moving into. But the safest play, if you guys just want just clear definitive trades, are below the lows or above the highs plus a break out of that descending trend. Failure to do either is just going to warrant consolidation, and that shouldn't be something that you guys are interested in. Last but not least, guys, Nzdusd to start on the monthly time frame. One thing to factor in is that we are range bound to begin. But at the same time, bearish momentum is still the momentum that's in power. That's what created this range. Same time, you do see a small term impulse creating the base here, so we are in the funky area. But there are more bearish signs being shown than bullish signs. Looking at it from a weekly time frame perspective, it doesn't matter. There's no overall momentum. Why am I stating that? We are range bound. And so if we are range bound, you're just simply playing with what the daily's current momentum is, which in this case you can see is descending. Looking at it from the daily time frame as of right now, what do we see? We see a sharp movement to the downside. Then we see a nice state of liquidation or relief, and then we see continuation of that. But be careful. Pending orders to the left here, hence pending orders should be created to the right here. At the same time, we did state that this entire nature of the structure is range bound. And so we're just playing the lows and the highs. Looking at it from a daily perspective, we are quite bearish as of right now, but any trades, regardless of either direction, are treated as moderate risk only because of where you are within structure. Now, if you got that sell, just like AU, shout out to you, right? Well, again, one's basic, 1, 2, 3, impulse, relief, continuation, stops above the highs, and run it back down. Great trade on your end. But if you didn't get these trades and now you're looking for continuations, either this is going to form a higher low, and that's going to start rallying like that, and your buy is either above here or below here. Or you're going to want to see a sharp movement, a pullback, and then start running it down to the monthly support. But be careful. We did false break last week, and we could create a double, triple bottom. Start going triple, I say, but there's thousands of bottoms all the way here to the left. And so the sells are very limited, right? You just want to see what you're dealing with over here. And so if you do break below this low, give it a shot. If not, you want to be taking a look at this 69.12 handle, and you want to see a sharp movement above, short-term pullback, and you could run that back up. Once again, that's all treated as short-term or higher risk. This would all be treated as relief because you are still stating that's in control, and you still would expect continuations back to the downside unless we broke above, invalidating the initial impulse. Continuation, and then from there you can rally that back up. And so with that, guys, those are the $6 index pairs that I want to go through from a longer time frame stance to a shorter time frame perspective. And so what I'm going to be doing now is I'm going to get a quick sip of water, and then I'm going to run through those $6 index pairs one last time from a longer time frame to a shorter time frame perspective in a quicker manner, just so how you guys could potentially expect structure to move in the next 24 to 72 hours. So if you could just give me a quick second to get a sip of water, and then from there we will break the remainder of those pairs down, and then we will get into the questions and answers. All right, guys, let's get right into it. So guys, just to explain one last time what I'm going to be doing, I'm going to be breaking down the next $6 pairs from monthly all the way down to the 4-hour, 2-hour, and 1-hour timeframes to be looking at how we could execute entries and exits for the next 24 to 72 hours. And so with that, guys, I hope you guys enjoy this, and then from there we will get into the questions and answers. And so starting right off, guys, we can see on the monthly time frame on euro dollar, we can see rejection occurring around the 115, 116 handle, which makes sense because in the past, we did see that this was a very strong area from the bearish side. This was a 3-year range of resistance. And so once we did break above, new bullish pending orders are going to be sitting there. And so it does make sense why structure is decelerating or exhausting off of that previous 3-year resistance. Now, taking a look at it from a weekly time frame perspective, we can see a couple of scenarios that can play out from either the bullish or bearish stance. Now, what we were stating last week was if we fail to break below the 115 handle, we could expect some type of pullback or liquidation after this initial impulse, which is what we are expecting as of right now. There was a tremendous amount of pending data that came out last week, and we failed to break that low. And so with that, we are expecting a long state of correction or liquidation to occur before the major drop back down. The question is, are we going to get to this previous 119, 120 area in which the left shoulder of this head and shoulders pattern formed, and this, the 115, 116 being the neckline to break? Or are we going to leg one more time to the weekly descending trend, creating a structural retest of the low we broke into, see continuations back down to the 114, 115, and potentially even lower, all the way down to potentially fill that French presidential election gap? And so we will wait and see a lot of plausible scenarios. Now, one thing to factor in is that the only way the bearish momentum becomes invalidated is if and only if you saw a strong enough crack above the 121, 122 handle, stating that breakout was false. Pulling it to the daily time frame, what can we see here? We can see structure is decelerating and exhausting off of that 115, 116 area. We can see that false breaks did occur in the past. That was a bad drawing, guys. Let me redo it. We can see here that there were false breaks in the past, right, which we did expect to occur in the current state, right? You can see here the past false breaks. We do see false breaks here once again. Does make sense. Why? So looking at it as of right now, we did create a strong base. At the same time, we are creating what we expect to be a long state of liquidation or correction. Now, within that, guys, you do want to look at a couple of key areas within the daily. That is your first trend or impulse that occurred, in which that was, that 119.50, that 120 area, that was the first lower high to be created from the daily perspective. Then we do see a second impulse or trend being formed. Hence, this 118, 118.50 is the second lower high to be created on this trend. Hence, the only way you're going to be seeing bullish momentum is if we start to crack above, followed by some type of continuation, and you could expect a rally back to the 119. But the big buys, or the longer term buys, won't occur until you're above this region, and more importantly, above, you know, the 124, 125 handle. And so looking at it from a 4-hour time frame perspective, where could we expect price to move within the next 24 to 72 hours? Let's break it down. We do have a sharp impulse here. Then from there, we do go into a nice state of liquidation or relief. News does come out, FOMC, Draghi, and then from there we have more data that occurs here. Now, instead of forming a continuation, we formed a reversal pattern, which now has turned into a state of liquidation or relief. And so looking at it from this perspective, as of right now, there are two ways that the sell is going to come about, or the buy. Either A, we're going to break below the 116.227, small continuation, and start rallying back to the 115 handle. Or B, this is the impulse. This is going to be treated as relief, and from there we are going to rally back to the weekly resistance and potentially even target the 118.50. Failure to do either, guys, will just warrant range bound, and that is not something that you should be interested in. Safest trades are going to be above the weekly resistance or below the daily support. One thing to factor in, guys, again, is that this is all treated as short term. At the same time, this is all treated as short term unless you're seeing cracks below or above those key areas that we were stating on the daily. So please factor that in. Going to the next chart, USD CAD to start off. On the monthly time frame, guys, we did see a lot of rejection occurring at that 130 handle until about a week and a half ago, in which we did in fact crack above quite hard, telling us that potentially CAD's economics are going to shift or change. So let's take a look at how they started out. We did see a strong impulse followed by a nice state of liquidation, and we saw a continuation of that, and that's what we thought we were in again. However, we are currently breaking above, but please factor in that this breakout can be false, or it can be warranted as a false break. Now, looking at it from a weekly time frame perspective, you can see that there were a lot of pending orders sitting within that 132, 133 region. And so with that, we could expect USD CAD to potentially pull back. And so dependent on how this pullback forms will depend on whether this is a false break or we actually relief for another rally back to the upside. And so looking at it from a daily time frame perspective, we are in a state of liquidation, and more importantly, in the smaller time frames, a reversal pattern after that initial impulse occurs. It makes sense, guys, why this is starting to decelerate or exhaust, right? For two reasons. One, we do have weekly resistance sitting here, so there will be a lot of rejection or pending orders occurring there. It does make sense why. And secondly, with every impulse does come a pullback or state of liquidation. Now, please factor in that even if this does break out, this is going to be treated as short term, because this could be all just relief or liquidation for one more rally back to the weekly resistance or potentially even higher. The only way you invalidate this impulse is if you break back below the monthly resistance, stating that that breakout was now false, and then you look for a continuation pattern to run it back down to that weekly ascending trend. Now, those would be daily plays. Looking at it from a 4-hour time frame perspective, like we said, we are in a state of reversal after that initial impulse was made, treating all of this as consolidated relief, but more importantly, notice the behavior. And so two ways are going to come about. Either A, we're going to break above, create a small continuation pattern, and start rallying all the way back to the upside. Or B, we're going to break below the lows, small continuation, and then from there, you're going to expect a push down to that daily ascending trend. Now, factor this in. Even though if it gets the daily ascending trend, this could all be treated as relief or a state of liquidation for another rally back to the upside. The only way this becomes invalid, like we stated on the daily, is if and only if you receive a break back below the monthly resistance, stating that this rally is no longer valid. Looking at USD JPY to start on the monthly time frame, we do have two impulses to take into consideration. First, this one right here, stating all of this is relief or liquidation. At some point, you're expecting structure to start rallying back above and expecting this to kick in. But within that, you can see that we did have this initial rally here, a break of the lows, potentially invalidating this impulse, but we do want to factor in where this impulse started, which was on the break of that previous resistance. Hence, this could just all be liquidation relief for a rally back above. So please keep that in mind. But as of right now, since this is the initial momentum, any bullish trades to the upside will be treated as short-term or higher risk until we have a clear or definitive direction. Looking at it from the daily time frame as of right now, two things to factor in. You are range bound. Secondly, you do have this impulse. Hence, all of this is treated as relief or liquidation. But on top of that, you do have this impulse as well, in which this is all treated as relief or liquidation. So make it simple. Wait for the lows to break or wait for the highs to break. Simple as that. Don't try to overcomplicate it. Don't try to figure out which way it's going to move. If you guys do want to see on the smaller time frames which way this should break out, this is simply, there's a shorter term sell, and then you have the longer term sell, and then the longer term buy. Let's start with the longer term buy. The longer term buy's got to start with a strong crack above. First, the weekly descending trend line stating it's invalid, as well as the weekly resistance. Then from there, you want to see continuation, and then you could expect a rally back above. You do not want to trade within there. Now, if that doesn't happen, you have first one sell. That was your impulse. This is all treated as relief. Structural retest to the left. Once this cracks back below, look for a small pullback and then start running that back down to the weekly support. Now, please factor it in. Look left on the weekly support. If you see here, we had a tremendous amount of pending orders from the buyers. The buyers are still in control because of that initial impulse. And so if we break below these lows, then that states that this impulse is now invalid and you could expect continuation all the way back down to the 160.60 handle. That's possible. Now, if that doesn't happen, then this is what's going to happen. This will all be treated as relief or a state of liquidation. You're going to expect a rally back to the upside. Those are the three possible ways that I see US dollar Japanese yen playing out as of right now. Pound dollar to start on the monthly time frame. We are starting to see some type of liquidation, deceleration or exhaustion occur, which does make sense. Please factor in pound's economics to start. You do see a sharp impulse followed by a long state of liquidation or relief, another impulse, short-term states of liquidation or relief, but we are stating this is one movement. Within that one movement, what we did state here was that all of this was treated as profit taking or liquidation after that drop, and now we are looking for continuations back down to the lows. But a price cannot move in a straight line shot, right? And more importantly, a trend is not a straight line direction, but rather a consistency of highs and lows. Even though we broke out of the ascending trend, we never broke out of the last higher low of the ascending trend, failing to create lower lows, telling us that momentum potentially could pull back. Now, if you look at it on the weekly and more importantly the daily, you can see that this 130 to 132 handle is very strong from the buyers. Why? Because if you look in the past, this was all sellers territory, which turns into new buying opportunities or buying orders, right? And so you look at it after the impulse, you do see a state of reversal or liquidation. Now, within that, we did see a lot of deceleration occur here, which is what we're going to expect there. And on top of there, we're at a very critical weekly level. Looking at it from the daily time frame, you do see a sharp impulse and then a nice state of liquidation or relief. Within that, we do see another impulse, but be wary, we're not breaking the lows. Yes, this is relief, but you want to sell below the weekly support. Then from there, you're going to look for continuation and then expect to run it all the way back to the downside. But let's take a look in the 4-hour time frame just to look closer to see how we could potentially look for both trades. So looking at what's been occurring on pound dollar as of right now, we can see that we had this huge drop. Nice state of liquidation or relief. Once we broke those lows, you saw continuation back down to the lows. Now, we falsely broke those lows. Keep that in mind. 2 weekly supports were falsely breaking. With that, let's take a look at current momentum. Huge impulse. Then from there, we see a state of reversal. From there, the reversal does turn into a sharp bullish trade, but we do go into another state of reversal. Please keep in mind, though, that even though we were breaking out right now, this could turn into just a state of liquidation for one more rally back up and potentially even higher. The only way that this does in fact become a sell, and this is what I was stating, we're going to look on the 1-hour time frame here real quick, is if and only if we do see a clear break below this low. If you do see this break right here, then from there you're going to look to rally first to the weekly support and potentially even lower back down to those previous lows. Because this doesn't break out, that's treated as relief, and you're going to expect to push back to the tops, riding this momentum. Failure to do either, guys, will just warrant consolidation within this. That's not something that you guys should be interested in. AUD USD, guys, on the monthly time frame, we are breaking out of that low. At first, we did state that even though that the momentum was still to the downside and all of this was treated as liquidation or relief, last month we failed to break out of that higher low. What I stated before, trend is not a straight line shot, but a consistency of highs and lows. We broke out of the trend, but we never broke out of the last higher low of the ascending, which is why structure started to pull off. Now, we are in fact closing below it, which could tell us that, you know what, we could expect continuations down. But please keep in mind that once we did in fact break these lows near here, this is where the main rejection started to come about. And you can see where all the pending orders start to occur. You can see pending orders sitting within here, here, and everywhere around. And it's very choppy between that 74, 73 handle up to the 76, 77. That's how AU has always been. So looking at it, yes, we could be sell bound, but you want to be careful, okay? Now looking at it from a daily time frame perspective, you see a sharp movement. And then from there, we were in a long state of what I thought was reversal. And we were expecting liquidation at some point, which we did get. but we had to see one more impulse first. Then from there, we got the state of liquidation. And so even though, guys, I make these, concepts about what I think is going to happen, we trade what we see, not what we think in the end of the day. And so if price doesn't move exactly how I anticipate it, sorry, guys, then simply I'll just go with how momentum is moving. That's the beautiful thing about being a price action trader. We don't have to be set on one principle or one set direction. It's just how momentum's going to push. And so looking at it from a smaller time frame, you see a sharp impulse. Then from there, a nice state of liquidation, another impulse. And so either this is going to break out, tag the weekly, or we're going to, liquidate for some time, create a structural retest, and then start dropping. That is very possible. Safest plays are going to be below the lows or above the highs. Looking at it from a 4-hour time frame perspective, we are moving exactly as we anticipated, creating that slow, decelerated, long corrective state. Notice this, okay? So how are we going to play this? We're going to want to see a break below, small pullback, and then from there start to rally that down to the weekly support, stating that this is your momentum you're riding, and all of this was relief. The only way that this is going to break out is that was the impulse that rallies. Now, treat as short-term, right? Because momentum is still descending. The only way that it's going to become a long-term buy, for not long-term, but let's say medium length, is if you break above the 74.81 continuation, and then you could run that back here. Once again, all treated as relief or a state of liquidation because momentum is still descending. So you could expect another drop back down unless you saw a strong crack above. Last but not least, guys, NZDUSD to start on the monthly time frame. Even though momentum is still siding with the bears, we are range bound, right? And you can see here that the range was created after we created short-term higher highs, warranting that is short-term bullish momentum. Looking at it from the weekly time frame perspective, just like AU, guys, even though we broke out of this trend and that trend and that trend and that trend is not a straight line shot, but a consistence of highs and lows. And so what we are waiting for is the breaks of the highs or the lows, simple as that. And so the momentum that you're going to be trading within an NU is based off of what's the momentum in the range. Looking at it from a smaller time frame perspective, you can see a sharp drop, a nice state of liquidation, and now continuation. But we're not breaking the lows, and look left. There were a lot of pending orders, which makes sense why we should see pending orders where we currently are sitting. But looking at it from a smaller time frame perspective, on the 4-hour, we can see that we are in fact holding the range. We falsely broke the range last week. Hence, the range is still holding. So 2 possible ways: sharp impulse, treat it as relief, or continue as liquidation. If you didn't get the entry within here, all good. But that was a nice sell. And so now we are seeing continuation. If we see this low broken, small pullback, you could expect a drop. Now, if that doesn't happen, what could happen is structure could simply create that as a trend. It's going to start liquidating, really pulling off, and then from there drop one more. That's possible. That's what potentially we're expecting in a lot of pairs. But make it simple. That's your range. Play the lows, run it down. Play the highs, run it up. Again, the buys are still treated as short-term, a higher risk, could create a structural retest for continuations back down. You want to invalidate the buys by breaking above the consolidation box, stating that impulse is now invalid. And so with that, guys, these are the pairs that I want to review in reference to the $6 pairs going from the monthly to the smaller time frames, finding how exactly we could enter and exit those positions for the next 24 to 72 hours. Hope you guys enjoyed that. And now I will be taking the questions and answers. And so that was it's a lot to keep going straight away for like a month, for an hour straight. But usually, guys, I just get in a rhythm and I'll just go straight into it. So I'm excited now that I can go. Now we can get into all these questions. And yeah, so thank you so much to all you guys sticking out. I really appreciate that. Please know, guys, that these always take place every Tuesday at 5 p.m. And so I would love it if we see you guys every single week, because I'm trying to make these big. I really am. Really trying to grow these. I hope we can get a lot of people in here. And so I think I'm going to start streaming them on YouTube. I think that'll drive a lot of people as well. And so let's go into all the questions. All right, here we go. Chris, legend. You got a mic?
Yeah, man, we are.
All right, what's up, big man? How you doing?
Yeah, sweet. Just
How's
getting
the
on with the
week
week.
going?
Choppy. It's all right. Just getting in the rhythm.
Fair enough, fair enough. Euro AUD you want?
Yeah, please, man.
You got it. I don't have full top down, but I can give you the next 24 to 72 hours. Does that work?
Yeah, that's perfect for me.
Okay. So let's just break it down real I hate trading these cross pairs, but anyways, tough region. We are creating a potential structural retest of that low that we broke. This is all treated as relief or a state of liquidation as of right now. But you're still buying, right? Because momentum's still ascending, and that's your higher low.
Yeah.
And so looking at it from a weekly time frame perspective, okay, dicey. Couple of reasons why. Yes, you are holding that low, but notice the drop here, right?
Yeah.
So you're ascending, but at the same time, you could break out. My honest solution is, okay, we already have the way that we're going to go about it. You ready? So this is nice and simple and easy. We're going to do this. Ready? So you got that's. Do I even care about that? Yeah, I care about that. Why? Because if we put here, look left, we could go to here and then drop, right? But here you go, legend. Two ways that we're going to go about it. For the buy or the sell. I don't know what weekly levels you have, so if you got weekly levels or stuff like that in front of you, then disregard what I'm saying here. But before I pull the fibs, do you see where I'm going to take the sell?
Yep.
Where am I going to pull them? Where am I going to take the sell? Below what?
Do you want me to annotate?
Yeah. Oh, you can annotate. Hold on. Yeah, here you go. Go annotate. Sell goes where? Yep.
Yeah, that's it.
Yep. Buy goes where? You have room. Yeah, you got room.
There's about 120 pips in now.
If you got weekly or monthly, I don't know what key levels you have here, but if you got weekly or monthly levels here, then don't tag it.
There's a weekly at 1.58888888.
Like that?
Yep.
Yeah, you got enough room.
That's what I'm trying to squeeze them in, yeah.
You could squeeze it in, but remember my analogy about the roller coaster and risk exposure? Where are you with the roller coaster?
Yeah.
You're at the end, right?
I am, yeah, I'm cutting it close.
Right, so the risk exposure increases or decreases as you get higher?
Increasing, obviously.
Right, and so that's the only thing I want you to factor in. The sell would be great, and look, that's what I was saying. If I pull the fibs, now you'll see that. If I pull fibs from here, hold on, it'll represent. So tell me, you see now the low that I want to be broken? Once I see. Yes, sir. I wouldn't even take it here because look, this is what could happen. This could rally here.
Yeah, bounce back off.
Yeah, right. You see all the pending orders?
Yeah.
Yeah, let it invalidate this. You know what I mean?
Yeah.
So, if I were you, make it a two-way bias. Set your alerts and just do this. Look, okay, two ways. Basically, let's pull fibs on this. So you got, where are you feeling on this? Let's see here. Let me get your trend for you. So what would you prefer? If you want 2 hour, there you go. That should give you clear. Yeah, that's clear now. What do you want on the 2? Show me. Invalidate this. Invalidate this, Chris. Invalidate this. How are you going to invalidate that to say that we're getting continuation of that? Yes, sir. Break back above here. Right.
Yeah.
All right. Entry here. Stops here. Take profit 1 here. You know the 1, 2, 3 pattern? 1.
Yeah.
2. There's your 3 back to 1, and then break it and go.
Yep.
That's it. So just look. Set 2 alerts. Either entries above here, or your sell is going to be there.
Yep.
That's it. Because you don't want to trade in here. You're not interested in this. That's it.
Yeah. Because all I was watching was I see this candle, which is obviously broken all these highs. It's come down for the structural. So now I'm looking for that little pop just to the upside, just to squeeze some juice out of it.
You'll probably get it too, because do you agree this is decelerated and exhausted?
It is extremely exhausted.
That's what I'm saying. So this is probably going to happen. And take a look. Where's EU expected to go, up or down?
Well, yeah, immediately up. Yeah.
Right. There you go.
Yeah. Sweet. All right, that's all right. Just a bit of extra confluence from the boss man.
No worries. No worries. Does that make sense? Let's answer that. So one last thing.
Lovely. That's exactly what I wanted to hear.
Oh, no worries. So it's Mo. I don't know. But so one thing I'm just gonna say real quick before it's Mohammed. I got you. Okay. No worries. One thing I'm gonna say real quick to all the guys that are still here. This is the man that I talk highly about because no one's getting pips like him. I'm just gonna put it like that. Okay. So there was I have when I don't know, I got some people that are trying to come after you, Chris, but you really holding the leaderboard right now.
Yeah, I can try.
Keep holding it down, all right?
Yeah, man. Cheers.
Always. All right, let's go to next. All right. Oh, he said I'm coming. Mr. FX18 said, cheers, Albert, going over the pairs. Always. Hope you're having a wonderful time, legend. Hope you're having an amazing time. You deserve the vacation. Okay, someone was having. Is this going to be? The webinar will be uploaded on YouTube, so you guys definitely can all watch. If you guys don't know my YouTube name on there, you can just, I'll type it in now. Just type in @thatfxtrader on YouTube, and you guys can go and type in, and the recordings will be up within the next coming hours. And so will be the full length and then the highlights, which I did those, and breakdown setups as well. So you guys, if you guys don't want to watch the full thing. What else we got? How do you tell the difference between a state of reversal and liquidation or continuation? Sure. So real quick, notice this. A trend needs 4 movements to occur. So let's start with the bullish. You have a low and you have a high. And so the next movement that we need is the third movement, which creates is our higher low. And then you need a higher high. This has 4 movements. And notice how the third movement creates your continuation, your profit taking, your liquidation, blah, 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 etc. Now, the reversal, notice this. It makes a low and it makes a high. But the difference is it will never make that third movement. It will just keep going. And so you're expecting this to liquidate because someone made money here. They got to take profits at some point. And once it does, that turns and that reverses. Now, don't get me wrong. The reversal doesn't mean this becomes invalid because this can turn into continuation and go again, right? But that's how you tell the difference between continuation and reversal. So let me know if that made sense. Albert, how old am I? I'm almost 28, getting old. IGTV Pro. I'm uploading on Instagram TV, legend. I'm getting there. And so I got 1 video up there now. I'm going to try to do more. Thank you so much, Reptar. I appreciate you coming out, legend. Alex, legend. Always. What's up, big man? How you doing? You got your mic?
Yeah.
How you doing, legend?
I'm good, and you?
Alive and well. So what's going on? Do you want to share your screen?
Yeah.
Go right ahead.
Sorry, I'll always forget. Oh, here. Okay, this one. Okay, perfect.
What's that?
It's my bro. It's a small account. I tried.
No, not the account. I was saying like the charts and the brokerage and all of that. Because weren't you using TradingView before?
Sorry?
Weren't you using TradingView before?
Yeah. I'm using TradingView for like 3 or 5 months.
And so did you switch to this or are you just keeping this open?
No, I took my TradingView, but this is only my broker where I took the trade.
Ah, I got you.
So
no.
It's because okay, sorry, I didn't share the goods. Okay, sorry, it's because I lost some trade.
Mm-hmm.
And I just want to see the level here just to show you the right place in TradingView.
Yeah. Are you on TradingView? Okay, there we go. Yeah, I can see it.
Yeah. I got it too. So I took some trade. I will put the new chart. I took after the big impulse here.
Mm-hmm.
I was sure that the movement have switched. So I took some buy right at the bottom here. Honestly, I will tell you the truth. doesn't know I took the buy here. I didn't wait. I was sure that it will reverse now, but it didn't.
And so before we go into anything else, I know you're dealing on the 15. You know me and my thoughts on the smaller time frames. But anyways, listen, Legend, no worries. Look, you have an impulse, right?
Yeah.
With every impulse comes what?
People take profit.
Yeah. Okay, but look, let's say it stopped right here, right?
Yeah.
You can't take entry here because where's momentum here?
Is downside.
Okay, right. Where's the last higher low of this downside or lower high? Where's the last lower high of the descending? Here, in this example. What would tell you that
last lower high?
Yeah, what would tell you that this is going to continue?
There's nothing that telling me that continue.
Well,
okay, yeah, I understand.
You see the last here, last lower high?
Yeah.
So we need to.
Okay, yeah, I understand.
Because look, the idea was correct. Look, the momentum went through after, right?
Yeah.
But market momentum was descending the entire time.
Yeah.
That's all.
Sorry.
Does that make sense though? So you see
sure.
You see like here, the last lower high, right?
Yeah. But that was not only my mistake because my stop loss was right at the good place because I had a bigger take profit. My stop loss was at the bottom here of the structure. Sorry, of the structure.
So you never got stopped.
No, I closed the fault I did. I closed my trade right here.
That's okay. We learned from it, right?
I know there it was clearly too early, so I took a lot. I took more lots.
Okay.
But I closed all the lots right here.
Right.
Because I was scared and I was asking myself.
Just for the future, so you know, look, did the lows ever break?
No.
Okay. Look. Did we break out?
Yeah.
Okay. Then from there, where would your entry be?
Sorry. I will look back. Yeah. Okay. I took entry. My first entry was there. After I took the entry in the green candle here.
Right.
And I took one here too.
And Alex, watch this. Just pull fibs from here to here. Pull extensions.
Okay.
Yeah. Yeah, go to
Here or here?
Yeah, the low, the wick. Yeah. Perfect. Show me entry.
I took an entry. Oh, okay, perfect.
Like where should it be? I'm saying, where should your entry be?
Where should my entry be? Should it be? I think. Here on the top.
Yeah. When we break, so on the red candle, you go.
Okay, perfect. Because I was going to say on this red candle, but we didn't have the last confirmation, I think.
Right. And notice this.
Perfect.
Remember 2 types of retest? What's this? So look.
Oh, yeah.
You see, so Legend?
Yes.
Alex, confirmation is everything, my friend. You know what I mean?
Yeah, I understand. So just the second, like I closed where I had the last confirmation and I could.
Yeah, that's the structure. That's the structural. Look, it's the structural retest. And look, ready? Watch.
Yeah.
Let's break it down. High, lower high. What's that?
Higher low.
Other way. Lower high.
Lower high, yeah.
And what's this? This is another lower high, right? So it's another lower high. And then when we break, what do we create here?
Higher high.
And then this creates a
lower high.
Other way.
Okay. A higher low. Sorry.
Right.
Yeah.
You have a look. And remember, look, someone just asked the question, what's the difference between continuation and reversal for movements? Look, high, low, high, higher low, higher high. There's your trend. Yeah,
perfect.
So to the person that was asking that question, hopefully that answered that. Okay.
Okay.
Does that answer your question on why that trade?
Yeah. I really understand. It's a terrible mistake.
No, listen. No. There's no terrible mistakes in the end of the day, Legend. Because look, You want to talk about terrible mistakes? Let me be blunt with all of you people listening to this real quick, okay? I've been trading now close to 5 years full time, all right? But I'll tell you about my upbringing. I blew up close to 15 accounts in my first 3 years of trading. And on top of that, I didn't use stop losses for like 12 accounts. So, you know what I mean? Like, don't ever think that you're doing something, you know, that's dumb or stupid, because look, I've done it the worst. You know what I mean? Like, you can't do it worse than me. You know, I went through it all. And so, you know what I mean? In the end of the day, it's a trial and error game. And if you understand that, and you know that it's not a get rich quick game, right, you will get there. You know what I mean?
Yeah.
And so no worries, Legend. We learn for the future, right? So you learn from this. Every impulse, you will get a pullback. But on top of that, for you to take a trade, right, you need to see higher highs or lower lows being formed. And the most important thing that you need to learn, well, another thing that you need to remember is don't cut your stops. Leave the stops where they are, right? And wait. And the last thing is don't enter in a seller's market. You took a buy in a seller's market.
Yeah, that's it.
So what I want you to do is when we're done with the webinar and so forth, go into your journal, Legend, and be like, okay, this is the trade I took. These are all of the things that I need to fix, and I will never do this again for the future. And that's how you make minor tweaks. You know what I mean?
Yeah.
Beautiful. Legend, do you have any other questions on other trades you took?
No, I only trade the USD GPY, so that was the only one I took. But I have one last question, just because it's happening right now. This green candle, does that mean that switch the trend, or you need to you need to wait the end of the next candle, and after that will mean the okay, perfect. Yeah,
because look, what was all this? Was all support. We broke. Actually, this is resistance. So for me, I'm probably just because, and we're doing on the 15, by the way. I would wait for the hour, but I'd wait for that and go.
Okay, perfect. Yeah, no, it's just for an information, just because it's happening right now. But if we can see like this on 1 hour or daily, we wait for this.
Right. Precisely. Like on the 1 hour, if this is how the 1 hour was, this is the last lower high, wait for that and go. Stop here and go.
Yeah.
Beautiful. Works?
Yeah.
Good stuff, Legend. Keep rocking away.
Perfect. Thanks a lot.
Always. And I'm just going to go back to my screen, Alex, if that's okay.
Yeah, that's perfect.
And let's see here. What determines my weekly and daily resistance? Do I use quarter points? I think quarter points is the most nonsense thing ever created. I'm sorry to anybody who uses quarter points, because quarter points is based off of a theory based on X pending orders sitting at X area. I'm probably saying it very incorrectly, but I understand the concept well. And so my weekly levels and monthly levels are based on key areas that structure has rejected in the past and things like that. And so they're not based on the quarters. You know, it's just a matter of just how structure is respecting X areas. Because let me tell you something real quick just about the quarter thing is like, you know, what he's supposed to put them on every 250 pip increments and so forth. It's like, well, what if the banks decide that they're going to put hundreds of billions of dollars on every 125 pips instead of 250? Well, that quarter theory just went out of business, right? Because in the end of the day, the game has now switched from being based off of what's the word I'm looking for? The game has switched from going over, you know, X assets backing up X to value something, rather than everything's based off of hypothetical and psychological value now. And the biggest financial product that can prove that to you is cryptos, right? That's literally what's showing to you what the world's shifting into. And so that's how I go about my monthly and weekly levels. And on harmonics, I think harmonics are nonsense as well. I think everything's nonsense except price action trading, just to be honest with you, because now don't get me wrong, I'm not opposed indicator trading, but I am opposed if you use indicators for confirmation. I don't care if you use indicators for extra added confluence, but if you're telling me that you're taking a trade because the indicator told you so, then that's not good, because, you know, what if that indicator fails? Then your whole trading, you know, strategy has went down the tank. And so, see, harmonics, bat patterns, all that stuff, it's all skewed and perspective based. I'm a firm believer that you need such a solid foundation of price action to be a long term trader, look, I'm not looking to make $1 million in 3 months. I'm looking to make $1 billion in 30 years. You know what I mean? And so if that's the case, how am I going to get there? And what's the approach that's going to allow me to survive for that length of time, right? And so that's how everyone needs to be thinking, in my opinion. Any great trader that you meet from a technical basis, even if it looks like they use fibs or whatever, they have a phenomenal understanding of a price action perspective. And so that's just my take on that. Thank you, guys. And then what's on my hot list? Nothing as of right now. I'm not interested in anything, to be frank. Like, a lot of people in the group chat were like, where are the signals? And I'm like, nothing's really good right now to take. I don't really like anything. I'm going to wait, but I don't really like anything. I might take, I don't really, there's enough pips up to here. Yeah, you can take that. Take that. That's possible. I'll take that buy. If that breaks out, we'll signal the buy. I'm really just chilling right now, guys. I'm not really too interested in taking trades for we're almost done with the quarter. And so, yeah, I'm excited to go into quarter 3. And yeah, and then I'm going to have to run off, guys, unfortunately, if that's okay. But definitely bang out next for the last one. So, like, same thing like I did with Chris. I don't have full top-down analysis. Is Chris still in here? That's a pair that he, like, trades to a T. Chris, you still here, legend?
Yeah, I'm still here, man.
What do you got on next real quick? You got the buy or sell?
At the moment, I'm short, but I'm at the moment, for me, it's in a bit of no man's land.
Are we short? We're short term, right?
Yeah.
Okay.
It's sitting on one of my weekly supports at the moment, so I'm just watching it play out.
You mean right here?
1 second, I'm not even looking.
Is your weekly support 119.88 something?
119. I've got 119. Not 19.954. I've got. It might be wrong.
No. Because I got this here. Break, false break, break. That becomes new support.
9, 5. Okay. Mine must be off a bit then.
That's all right. So let's look at it though real quick. Okay. I'm going to bring Chris on this because this is the pair that Chris mastered and owned. So what do you got, Chris? 2 ways on this, up or down? What do you think first? The buys? What do you want to see? Let's go 4 hour. Buys, you want to see what?
But obviously we're descending, so I want to see it on the other side of that for anything. And then you got probably what you got up there, resistance.
So what would you take the buy on if we broke what?
Let's have a look.
Here, maybe this will help you. Does that help? I'm thinking, okay.
Maybe if we come up, maybe retest around here. I might look at it, but.
What about, I like this, but why not take this entry, Chris? Let's take it in here. So let's wait for that.
Yeah.
Let's get this in here, yeah?
With these pairs, they you know, you got to be real careful. They can get aggressive.
Yeah, I bet they can.
I think I'm up to something like 550 pips on this one in about 4 days or something. It's ridiculous.
And also notice the pattern that would form if this occurred.
Yeah.
Inverted, right?
Yeah, exactly.
Okay. And then, so for the gentleman or the lady, I think it's a gentleman, I'm not sure, but that was asking for the sell. How would you take the sell? Only if you saw what?
I mean, any sells from now, they're looking a bit. I wouldn't really go for it because you've got all this.
What would you want to see? Yeah, exactly, my man. Exactly. So you want to see.
Yeah, definitely.
Invalidate the ascending, right?
Yeah.
Then pull back, and then we start.
Truthfully, I think we're looking at a higher low being created, so
Sir.
I'm not even worried about sell at the moment.
Look at this legend speaking like I love it. Been in the game for like 20 years. Like I love Chris's like approach. It's just so like relaxed and nonchalant. And, like, nah, we're creating a higher low. Not even worth it. Nope. But no. But let me be honest. Let me be honest, guys. Something real quick, just for the last 10 seconds. The way Chris like approaches and speaks like is brilliant. Let me tell you why. There's no excitement. There's no aggressive emotions. What do I mean? It's so calm cool, and collected. And it has to be like that. Why, Chris? Why does it have to be like that?
Your emotions will definitely reflect your equity.
Yeah.
It will swing with your emotions.
Yeah, that's the truth. And that's the truth. And you know, Chris wants to be in this game for the next 20, 30 years, right?
Yeah, man. I want to make a job out of it.
That's what I'm saying. Chris, by the way, someone's asking if you have an Instagram page now.
Only a personal one, not a trading one.
Because I've been posting so much of you, people are like, where's the Instagram page at?
Unless you want to see photos of me and my wife, it's nothing else.
But yeah, Chris, all right, we broke this down. Thank you, legend.
Cheers, man.
And so, guys, with that, today's webinar was awesome, was absolutely awesome. And so thank you so much to all you guys and girls that came out. I really appreciate it. And, you know, these happen every week, guys, every Tuesday at 5 p.m. I've been really good with the times lately, so we've been cracking these down. We'll be uploaded to YouTube as always. And so, yeah, you know, tell your friends, tell everyone that, you know, these happen weekly, and I love just meeting new people and, you know, answering any questions that you guys may have. And so it's a lot of fun, guys. You know, love all my students, love all you guys that are up and coming and learning as well. And yeah, guys, you know, I'm looking at just all the people that are still here in the group, and a lot of them consist of you know, a lot of the people here consist of the people that are part of the training course. And it's, you know, you guys want it, you know what I mean? And like I always tell you guys in the end of the day, in the live training and so forth, you simply get what you put in, you know, and you will only get as good as the amount of charting hours that you put in. You know, everyone's like, Albert, I want to get to your level. And I'm like, okay, well, put in a considerable amount of charting hours and you will most likely be better than me. Like, I don't really think I'm the world's greatest trader. I think that I'm just someone with a tremendous amount of hours that's put in, you know what I mean? And that's how I look at anyone who's good at anything they do. Like, I don't consider Zuckerberg or Musk or Jobs or anyone above anyone else. Just think that they have an understanding of their craft better than most, and they were luckily able to be first to market in what they did. And so, you know, that's how you have to look at it. You know, like I told the guys in live training last week, world's smartest man lives on a farm, you know? And so, thank you so much, guys, you know, for everything, for coming out. I appreciate the kind comments. We are growing. You know, the culture is spreading, let me tell you. And so keep pumping away, keep chugging along, right? Keep ripping the pips out the market, guys. And I will see you all next Tuesday. If you guys need anything, as always, Telegram, Instagram, wherever you guys want to reach me, best place at that FX Trader everywhere, wherever you guys look. And so have a wonderful rest of the week, guys. Keep kicking ass, and I'll speak to you guys all later.